Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit today, and let's break down today's market price action. It's a Wednesday, January the 8th. Let's get into it. As always, we'll be breaking down today's market price action by looking at broader markets, take a look at news events, see what the currency basket is telling us, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis, let's just jump right into the numbers and the headlines. Well, we don't have a whole lot of change in the markets. The outlook remains uncertain. So if you just take a look at where we are and how the price action has moved in the past few days as we started the new year, the outlook remains uncertain. We haven't really broken out the resistance. We haven't really broken out the support. So we're kind of in the middle of the no man's land. So that really hasn't changed. And like I've said before, until we really break those key levels, the market is likely to chop around here. Now, if you take a look at outside of the equities, the bond markets remain strong. The bond yields continue to stay strong. And then we have the US dollar, again, staying strong as well. So no real change over there as far as the price action goes. So here we are with the performance change. And we can see that we have the dollar as being one of the best currencies today. CAD again is following suit. I must say that the CAD is slowly, being on par with the US dollar in the last few days, where, in the month of December, we have seen a big divergence. So it seems like that's kind of being on par here. Now, as we take a look at what was the biggest loser for today, and that was really the pound. And again, that's coming off from the rising borrowing costs. I was reading this is the highest level since 2008, and that's really weighing down on the pound. So we talk about going into the currency room for this week. We were looking at see if the European currency is going to hold. You can see that the Swiss franc is holding, the euro is holding, Aussie's holding, Kiwi is slightly weaker. So really the big opportunity was in any of those pound crosses. Doesn't matter what you pair with. So pound CAD, pound dollar, they were really the big mover. You can see that the yen is kind of holding it steady here. So expect this kind of price action until we really get that big break in the markets one way or the other. What we are noticing here is that there's more intraday volatility where, it's going up a little bit, it's going down a little bit. But at the end, it's not really going a whole lot. And that's just because that's what the markets are doing right now. Now, if you just take a look at broader markets, here we are, S&P only up 0.16%. World Stock Index up 0.03, pretty flat. Cryptos are down. Gold is up, and then oil. So again, this is not a big, strong day in the markets. If you take a look at where we are in the crypto market, you can see the Ethereum and Bitcoin down the most, followed by, the Bitcoin Cash here, and we got the Litecoin here. So really not a whole lot of excitement in the crypto market. Now, let's just take a look at where we are in the equity markets, and this is where we are. I think as you take a look at the chart here, this is the high, and this is the low. And you can see that in between, we got, we touch over here, bottom over here. We got a big nasty candle here. We got a bit of inside candle today. So again, not a convincing price action. Even if you take a look at intraday price action today for the S&P or any broader markets, you can see that that's exactly what we were seeing. We were seeing 1% up, 1% down. And remember that 1% is a big move. So that's going to drive the sentiment higher and lower. And that's really where we're getting this back and forth price action. Now, when we take a look at the reports that we have left for the rest of this week, again, remember that tomorrow the equity markets are closed. So we are going to expect some lower volatility. So going into Friday is really where there's going to be some fireworks, and that's going to be off the US and Canada's jobs report. Remember, this is the number, the unemployment rate is really what's in focus here. So we're going to see more of that big move on Friday. But again, going from now until the next 24 hours, I would say that this is where you want to be careful because, if the equity markets are closed, we're going to see some lower volatility, and that's really where you want to be careful with the market movements here. So let's just jump into the currency analysis here, and let's just take a look at what the velocity scores are. And as you can see, the velocity scores is pretty clear here. We got the dollar and the CAD as a +2. We got the Swiss franc, euro, and the yen as a +1, but really Aussie being a -1, Kiwi being a -2, and then the pound. So what we can do is focus on some of the pound pairs and see where they're heading next after that big drop today. But, I think we're going to continue looking at some of the dollar and the CAD crosses. So let's just jump right into the possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at the possible trades ahead, let's just start with the good almighty US dollar. So again, dollar has been the best currency you can see in the past in the past few months. So we are definitely at some key levels. I mean, here we are. This is the peak we had back in 2022. We are slowly getting there. We're still a little bit far away. But now if you just really take a look at where the price action is, just pay attention to this exponential moving average. You can see that this is still going higher. We got a resistance here, and we got some support here below this exponential moving average. So at this point, if you're looking for a trend, the trend is clearly on the upside. Now, if you go on a 4-hour chart where we can see some back and forth, but you can see that every time it dips, it just recovers. So we're getting a little bit dip here. And this is where, we want to go short because we think this is going to roll over. But remember, stick with the trend. Until the trend is broken, we want to continue trading with that trend. So in the meantime, in the shorter term, we got a resistance here. We got a support here. I don't really love this as a short. I think there are better opportunities on dollar buying the dips. Just the best opportunity. Now, if you take a look at outside of that, here we are with the Japanese yen. You can see that this thing is also holding on to the support level. And we have tested that level 1, 2, 3 times. So as the equity markets are kind of uncertain where it's going to go from here, we are, if there's a risk off sentiment, I think in those environments, yen can outperform. But that's really where we are. If you just take a look at the chart here, this is again not a convincing looking chart which way it wants to go. Now let's go into the Swiss franc, and you can see that Swiss franc is clearly sort of trending lower, making lower highs and lower lows. So this is one I was watching going to this week if it gives up that level. But remember, when we go into that safe haven play, when the market pull back, we see the currencies like yen, dollar, and Swiss franc do well. And you can see that we're getting these rallies when the markets start to look a little bit shaky. And then when the markets sort of stabilize here, and then we see a bit of a pullback. So that's what we're dealing with. And I think you should expect some gyrations like that until we get some more clarity from the equity markets. Now, here we are with the euro. You can see that we're doing a very similar thing. We haven't really, we got that rally, but really haven't gone anywhere since then. So it's just kind of in a sideways play. I'm not really looking to pull the trigger on the euro either way until we really see break some key levels. And here we are breaking some key levels. Here's the British pound. You can see that this was a nice little rally, and we just sold off on that. So I think at this point, the pound looks like it's more under pressure. This is a daily chart. You can see that this is where, we can expect maybe a bear rally here. But I would expect to short those bear rallies. I think that's really the right play here. And then we have the CAD. You can see it's slowly climbing. CAD is no longer the weakest one here. Right now it's performing on par with the CAD. So maybe perhaps take a look at some CAD crosses. And then we have the Aussie, which you can see it's slowly stabilizing on the daily chart, but it's not a good looking chart. It's not telling you to be a long or a short. So we're getting some back and forth here. And then lastly, we have the Kiwi, which again would be a better candidate for a short. It's just not really performing as well. If you go on a longer term charts, that's where we're going to see that the price action remains weak. I mean, look at the shadows that we're getting on these candlesticks. But as you go out and you realize, well, we are at some key interesting levels. And are we going to break higher from here or lower from here? Well, the price action looks pretty weak. But at the same time, until we really break those key levels, we could go sideways for a bit here. So you can see that this is really comes down to not a whole lot of change that has taken place. We talk about rotation. The move definitely has been driven in the US dollar. So dollar pairs has been the better currencies to trade. From time to time, you have the yen that performs well. But outside of that, really, we're not really seeing a whole lot of rotation happening in other currencies. So let's just start with some of the pairs that we're looking at. So I was watching pound dollar going to this week, and then here we are. We got a nice little sell off over here. So we are right at the support level here. Then we just kind of bouncing off of here. Here's a daily chart. You can see that this thing again is nicely pointing lower. This was a nice little bear rally, went down. At this point, it's holding on to that level. As long as, we are staying below this level, any bear rally, I think it could be a decent shorting opportunity. Here we are with the Aussie dollar. You can see that all the dollar crosses are not really breaking. Either hasn't ever broken down yet, and either they're breaking out higher. So they're kind of stuck in the middle here. We have a nice little level on Kiwi dollar. So again, set some price levels and see when they break. We can also take a look at dollar Swiss franc. Again, if you just take a look at this pair, this looks more like a bull pullback opportunity where we have a nice little pullback here, rally here. We got a resistance here. So this, again, I do like it more on the upside. The next level of resistance where we had paused last time was pretty close, but if it breaks above that 92, I think it has a lot more area to catch up. And then we have the euro dollar. Let's just take a look at that one. So here we are with the euro dollar. You can see that this thing is also testing some key level. And again, if it gives up that 103 area, then I think it can easily get down towards that parity level where we were before. So yeah, some pretty key levels. But again, at this point, it's the same trade that's kind of playing. We don't have a huge new turn taking place. So I think what we can do, you can also take a look at currency pairs like CAD, pound CAD. If you're just looking for CAD to sort of catch up to the pound, to the USD here, you can see that this thing is rolling up nicely as well from the resistance breaking lower. So again, some of these CAD crosses I do like as well, even like CAD Swiss franc. This is a weekly chart, so let's go on the daily. You can see that the daily is getting up at the resistance here. If it breaks above that level, I think look at that 4-hour chart. You can see it's nicely trending higher. So some of the Swiss franc crosses are Aussie Swiss franc. Again, Aussie is not the one that's really moving here, so I would be very careful with the Aussie. But again, once the market really starts to get stronger, I think that probably be a better moment for being long the Aussie. But if the market looks shaky, then we're gonna continue, being on those safe haven currencies. So those are the ones that I like here. But like I said, we are at some key extreme levels, but at the same time, we're not really turning whatsoever yet. Can we consolidate over here? Absolutely. Especially as we go in the next 24 hours where there's going to be lack of liquidity. I expect, maybe things go sideways. But Friday is going to be a big day. So that's the game plan. Keep in mind, market's close tomorrow. Expect lower volatility, and then we'll swing back on Friday. That's the game plan. Have a great evening. We'll see you next one. Cheers.